Ladies, gentlemen, boys, girls, welcome. Our first podcast, roundtable discussion, whatever we want to call it. So we're Ledgerly. We got the whole team here. I'm Mike. We got our partner, Andrew. We got our partner, Chris. We're excited. It's going to be super casual. Today, the big day. Sunday, October 8th, 2023. Got three huge things that just happened. First thing, right? We just kicked off the start of quarter 4, 2023. What does that mean for all you business owners out there? We got some tax planning coming up, right? You got your 9 months of actuals, you got 3 months of forecasts. If you want to invest back in your business, you want to keep all the money that you worked hard for in your pocket, give us a call. Let's do some tax planning strategies for you. We're excited. We want to work with you guys. That's number one. Number two, all you individuals out there that haven't filed your returns yet, a week from today, actually a week from tomorrow, the 16th, is the 10/40 deadline. Again, that stands for all you individuals. If you need to file your return, do your due diligence. If you owe the money, if you owe the IRS, you owe the state, get in contact with them. If you can't pay it in full, just do your due diligence and contact them, get on a payment plan, okay? And number three, I'm a biased Cowboys fan, so I'd be remiss. Tonight, huge game, 49ers Cowboys.
The Cowboys will probably lose.
Will be in the house.
Wrong team, but
San
I
Francisco.
like the passion there. She will be. She probably will be, knowing her. No comment there. But we also got a big Colts fan here, Mr. Andrew.
Yeah, something like that. Haven't really watched this year, but yeah, Colts fan. I think they're winning right now. They might have just won or just lost. Who knows?
I don't know. But when this video goes up, anything can happen, right? So that's the agenda. So that's it for today. Today's agenda, obviously super casual, super laid back, open discussion, all things accounting, all things bookkeeping. So what we have today is we got 5 topics planned that we want to go over with you guys. And this is basically to get to college students out there all the way up to seasoned professionals in the industry. So without further ado, let's just jump right into it. So first topic, let's get into. So things that we wished we knew or we learned or had a better understanding of when we went into our first job. Chris and Andrew here, they went right into Big Four. You know, I was one of the littler guys. They were in Big Four, so I'm going to turn it over to them. Things that they wish they knew going into their job in Big Four accounting. So, Chris, Andrew, whoever wants to jump into it, take it away.
Hey, Chris, the floor is yours.
Yeah, well, so on a higher level, one of the things I wish that I learned in school that I had to kind of learn the hard way was getting absorbed in corporate structure. So, for example, you know, nobody in school tells you how to show up to the office, how to prepare your day and make a to-do list and how to... Because when you're in audit, you have, you know, let's say you're auditing cash.
You started Big Four in audit?
Yeah. And so I started at Deloitte. They kind of tell you how to audit, but they don't tell you how to keep track of the 4 or 5 audits you're going to be doing through the course of the 4 months that you're on the client's, you know, book, on site. And you got to keep track of everything. You have to, because every audit has 70 to-dos throughout. You're reaching out for data. They send it. You have to open up your email right away. You have to make sure everything ties to the trial balance, and then you go. But for me, when I'm working, I'm an in-the-zone guy. So I get into the office and I kind of open up my emails, and then I'm just in the zone. I schedule out my day. But when you're waiting on the client to send you something, you have to take periodic breaks. I'd say every 25 to 45 minutes. I would reach out in the morning and say, hey, can you send this? Then 1 o'clock comes around, and my second year is like, hey, Chris, did they send the information? Then I'm like, oh, let me go check. I go back to my email. They sent it like an hour after I asked for it. Now 4 hours went by. It's kind of towards the end of the day, and it didn't tie. So now the day's gone. I can't finish that thing that I was waiting on. So things like that, the client doesn't send you what you asked for the first 3 times. So that's not something I learned in school. Making sure I'm keeping track of everything was kind of like a learning lesson for me. Right. I really suggest finding a software that you could add to-dos. Sometimes Deloitte has them where you have certain documents, and on the document you can kind of put a color and assign urgency and not. But that was something that I needed help with that school would have been nice if they taught me. You kind of learn time management, but it's from a different level. Audit is a whole other story when it comes to time management. That was something that I wish I learned. Another thing is client walkthroughs. Like we took audit, we learned what an audit is in school, but they don't teach you how to sit there and talk to the client. You have to learn that the hard way in person by watching your, second years train you how to do it. And then when you're a second year, you're doing it all alone. So and you have that year buffer to learn, but that was something I just wish I knew going in. I would have been a little more confident.
Yeah,
Right.
and I think I could piggyback off that, especially on the control side with walkthroughs and everything.
Yeah.
And maybe a little bit different for me because I onboarded, so I worked Big Four as well. I worked at EY for like 3 years. I onboarded during COVID, so completely remote, and they kind of just, once it was time for, walkthroughs for our client, it was like, I want to say like May. But, we didn't really touch that in college, and they kind of just said, all right, Andrew, you're going to be walking through cash, AP, whatever these areas they hand to me. And I didn't have a whole lot of guidance. I had never witnessed my second year walk through one. Like they just gave it straight to me. They're like, all right, do your thing. I'm like, what do you mean? Like I didn't know.
I don't know
There
what
wasn't a
this
lot.
is.
Yeah, there wasn't a lot of
Right.
guidance. So it was really trial by fire.
Learn on the job.
Yeah, exactly. That was my experience personally. Um, but then as far as other things I wish I knew, maybe not so much the nuts and bolts of the job, and this might be more helpful for like just college grads right now, is that there are a lot of opportunities when you're an accounting major.
Yeah.
I can speak for myself. Like when I was at college, I figured I wanted to do accounting and whatnot, but I didn't know what that looked like in a job setting. And like the career center, I'm doing all the right things. They're like, my professors are like, all right, make sure you talk to your counselors. They'll get you, the right classes and everything. They'll tell you, what to apply for. So, they had me going to all these, like, whatever, like the job fairs when they
Yeah.
bring in, like, all these employers. But, like, all the professors in the Career Center, they're like, all right, talk to the Big Four. Talk to EY, talk to PwC, talk to Deloitte, talk to KPMG. Well, maybe don't talk to KPMG, but, talk to the Big Four. And, like,
The ugly stepsister.
um, but like that's all I knew. I'm like, all right, so I was just doing what they were telling me. But like, there's so many other like that's just like a minute portion of accounting firms out there. Yes, they are the biggest. They're global. They're massive,
Yeah.
and there's a lot of job opportunities there. But like Mike did, you could go to a regional firm, and you don't even need to go straight into public accounting. You could work for a company and just be their accountant. Like
Yeah.
what drew me to accounting was like I really enjoyed like I remember I took a class in high school. I liked doing like T accounts and like
Yeah.
like just the debits and credits, like just the language of
It's a
accounting
fun
itself.
balance game. Yeah.
Yeah, and then I get into, Big Four auditing.
Nothing like that.
Nothing like I was
Right,
like,
right,
is this
right.
accounting?
Right.
Yeah.
Well, yeah, I mean, you just hit it on the head because like that's the thing that you don't learn. So they started Big Four audit. I started an audit too, but at a smaller regional firm. But hey, audit is audit, and that's the thing. You basically get dumped in the audit room. You're following prior year work papers as a guide, but you have no clue what it means. And
Yeah.
Andrew hit it on the head. You got to go back to the basics. Go to your T accounts, go to your debits and credits, the things that you studied in Accounting 101, and what the debits and credits mean from a transactional standpoint on your balance sheet, your profit and loss, how it affects the statement of cash flow. When you go into the audit, you're auditing work that has already been done. So you're at the top level looking down. And what first year staff, at least in my opinion, from what I've seen, being a first year staff, you don't know what it means. You're basically just doing what you're assigned, cash, fixed assets, prepaids, and you don't know what it means. But when you hone in on the debits and credits, the transactional side, and what it means to the company's financial statements, that's when it clicks, and it's like, oh, okay, crazy. Okay, so my cash went up. So what does that mean for the other side? Okay, my accounts receivable went down. So that's just assets. So there really wasn't any net impact. Anyways, I can go off for this forever, but yeah, that's the thing with audit is you're kind of just thrown into it. You're expected to know it.
Yeah. Expect to be unexpected with assignments you've never touched before.
Right.
Like when I started on a commodities client, and they're like, oh, hey, we want you to go to this training that's going to talk about new shipping guidelines coming out. And I was like, okay. And then when you come back, they expect you to know how to audit that. So expect to learn. Expect to continuing learning is something that, especially if you want to be a CPA, you're gonna have to kind of be ahead, which is why I condone these guys. They do great.
And to go off of that, right, to be a CPA, and to get into our second topic, CPA license requirements, grad school, yes, no. The requirements behind a CPA license, things that you didn't learn them in school, maybe you learned them in school. So basically, what are the check boxes in order to be a CPA? So for our second topic, maybe I can kick this one off, but every state is different. CPA is a state license, whereas something called an enrolled agent is a federal license. But for CPA, every state is different. I'm licensed in the state of Massachusetts. I know Andrew's
I'm licensed in Connecticut.
And you're in Connecticut.
Yep.
But I'm licensed in my dreams.
Yeah.
I didn't take the CPA route.
Well, Chris,
and you don't have to, but
yeah, that's true. You don't have to.
And there's pros and cons to that. So actually, Chris, I want to hear like the route that you took, rather than the CPA.
Yep. Like, did you ever consider it?
So I'll put it this way: when I was starting at Deloitte, I did not know what to expect. Like, when you go into Deloitte, you and all your colleagues have a 5-year plan. No one talks about it's an unspoken rule. You don't talk about leaving Deloitte or the Big Four.
Right.
You start and everyone's like, yeah, I can't wait to be a partner. 85% of those people know that's not going to happen. 50% of them want it to happen, and maybe like 3% of them make it.
Yep.
But nobody's worked. If you're going to Big Four as a first year, nobody's actually worked in that environment. So you really don't know what to expect. You don't know what they expect of you. So I learned very quickly, this is not the route I wanted to take. When I was starting, everyone's like, hey, did you do your CPA? Because I was starting with people that they were first years, but they had just finished their MBA and got their CPA. So even though we were starting at the same
date,
to the same time, they had far more advanced knowledge and also credentials. So I kind of went in saying, like, I'm going to wait, because you don't need the CPA to be a senior, and you could be a senior forever if you really want to, but the goal is to become a manager, and you need that CPA to become a manager at a firm. Right. So I told myself, you know what, like, I'm going to wait and see how I like it. I didn't tell my colleagues. I kind of said, like, I'll start when I'm in my second year. I just kind of want to get my feet wet first. But really what I was doing is seeing, do I want to put all my energy into the CPA? Because if I don't want to stay at an audit firm and I want to go private, I'm not going to do it. There's no point in putting my energy into that.
It's a big time commitment that's taken away from everything else.
Big time commitment, and it will affect your family if you have one. Your relationships, it's definitely a stressful time. Mike, when you did it, you started clenching your teeth bad. You were getting migraines, waking up at 3 a.m, going to the hospital because you were clenching your teeth so bad. The migraine, like, it's.
Are you serious?
It was crazy. I was like, I had stuff with the CPA again, and obviously I'm bald now, so I lost all my hair doing it. I blame it on the CPA again.
And so
that's not my choice too.
But
I wish it was.
But yeah, so for me, I was going in knowing that I wanted this background in how to, process accounting and go through it. But once I was there, I realized, okay, this isn't the side of accounting I want to be in. Then what I did is I found a startup that I joined. And after a few months, I was like, this is where I belong. So that's where I put my energy. I'm also entrepreneurial, so I put my energy and time into that.
Right.
And learning how to start a business from scratch, build operations, and scale.
Which you've been crushing.
Yeah. The company I joined, I won't disclose the name, but when I first was considering joining them, they were doing like 600,000. That year they were going to do about $1 million, and I had to just go in. They had no one in the office before, so I start, and I get there, and I'm like, hey. So I go in their QuickBooks that they strictly used for invoicing.
Yeah, and it was like a checkbook.
So I go and I'm like, hey, when did you do your bank recs? And they've been in business for 3 years. And he goes, what's a bank rec? So I was like, okay.
Which, check out that short. Check out the bank reconciliation short.
Yes, please do. So at that point, what I had, and when I joined, they probably had like 8 credit cards. 3 of them they stopped using. So I had to go back and I just did all the bookkeeping for the last 3 years. And when you transfer payments from one bank, he went through like 3 bank accounts before I joined. So it was a lot of work, and it was a lot of just getting everything up and running. But as long as I got the ending balance to match the starting balance from where I was, that was all I needed to do, and we got there.
Right.
But
Classic cleanup engagement.
it was insane. It was the longest 3 months of my life. And well, anyway, so that client, we joined. They ended up cleaning up at about 1.2 million that year. It's been about 4 years now, and it went from, God, I can't remember. It went from 1.2 to 4.5 to 7. Last year was 8 million. This year we're about to clear 10. So that's where my energy was put, and that's where I excelled better in that environment than I ever would have in an art firm. So definitely, make sure you know your strengths. I work better in private inside a company than looking at their financials and telling them how to better do it.
So for all you college grads out there, you have a route that Chris took, maybe start in public and then maybe go into industry and then start up your own thing like we're doing here at Ledgerly, right? But for all you listeners out there that are like, hey, I'm going public accounting, I want to get my CPA, but you're still a little hesitant on what to do. There are the license requirements. You need to have 150 credits. Yeah. Andrew graduated with 150 credits. I did not. So I had to go get the 150 somewhere else. So it was up to me to either seek out maybe community college credits, go, the whole joke of underwater basket weaving, that one, right? Did I want to go get an MBA? Did I want to go get an MST? I ended up doing an online MBA during COVID. So it was kind of great because there were no in-person classes. Yeah. And every state is different in their requirements, their work experience.
Yeah, you should really check, your state board's site for those requirements because, like he mentioned earlier, he's licensed in Massachusetts. I'm not sure about what kind of other requirements you have, but I know for Connecticut they're a bit stricter. So the composition of the 150 credits you got were different. I needed to add, I think it was I needed 2 extra accounting classes. I needed an extra economics class, an extra finance, that sort of thing. So it's different by state. So if you really want your license, make sure, you consider before you choose a state, okay, where do you are you moving? Where's your first job going to be? So you want to get licensed probably in that state if that's where you see yourself in the future. But you're going to want to consider that and look into that.
And if you're a few steps behind and you're looking at doing this to go to college, some colleges have accredited programs that fulfill all the CPA exam. Yes. In my school, Southern Connecticut State University had that. So if you did the I think it's Bachelor's of Administration.
Yeah, the BASCS or AACSB accreditation. However, so Andrew and I both went to college at Stonehill College, but the accreditation was for Massachusetts CPAs, not for Connecticut.
Exactly.
So that's why Andrew had to go get a couple more credits.
Yeah. So
and the ethics exam.
The college will.
Oh yeah, you didn't have to do ethics.
Right. So Connecticut.
So you're not ethical.
No,
I'm certified ethical. Yeah,
certified ethical.
So for Connecticut, they do the little extra exam, an ethics exam. I'm not sure how many states have it, but I know Connecticut does. So that's another thing. So it's really important if you want your license. You check all the requirements.
Yep, definitely. That's a great point that Andrew made. And we'll put a link in the video too for the state for all the state requirements for CPAs. And one other thing too, is grad school. Andrew didn't need to go to grad school. I needed the credits, so I got an MBA program.
2 birds, 1 stone.
Right. But Andrew's firm is paying for grad school too, so it's kind of I'll go back to grad school even though I don't need it. So I guess that's one little.
So I mean, for me, and again, I was just kind of going by the book, going off of what all my counselors said and everything. But when I was in college, I really wanted to, I wanted to get into the workforce as fast as I could. And when they're talking to me, they're all talking about you need 150 credits, do 5 years, get a master's. And I'm looking into it. The requirements aren't you need a master's degree. You just need 150 credits.
Yes. Yeah.
So, ask my professors, the career development center, whatever. I'm so riddle me this. If I go to if I buy the cheapest credits, enroll in some community college courses, pay bare minimum and get those 150, I'm still eligible.
Right.
And they were yeah.
Yep.
I was all right. So that's what I ended up doing. I got I credit overloaded a few semesters, took summer classes, winter classes.
Yeah.
I graduated with 151. So definitely hit that mark. And then when I started my career in audit at EY, I was I was the youngest one in my class.
Right.
Which, granted, you were a year apart isn't really that big a deal. No, but I got in the workforce a year earlier, which is what I wanted. And then like when we onboarded new staff the next year, like not that I was really bossing around my staff ones, but like they look up to me, I give them guidance and everything. They ask me a bunch of questions. Like, some of them are older than me. They're like,
Right.
how are you my boss? I'm
Right.
like, so, you don't need the master's program, but it's certainly helpful. And Mike kind of mentioned it. I'm actually in a master's program now just because, company I'm working for, they they offer to do that. And do I need it? Like, no. Like, I've been prepping taxes for a few seasons now and been professional for years. But
Yep.
if they're willing to pay for it, like, just hashing out, more education. And especially on the tax side, like there's always constant like regulations like being pushed and things in the tax code that are changing or maybe applicable for like a certain number of years. So, it's a good way to stay in the loop.
Yep.
But yeah.
Up to date, yeah.
Yeah, and what you said, about a minute ago too, I think that resonates well because you graduated with 150, you were able to go right directly into a Big Four, and I think that to get into our third topic, that is one of the huge problems in my opinion with the Big Four is that they close the door in your face if you graduate with 120 credits. If you only have your bachelor's, you basically need 150 to start working there. I never worked for the Big Four, so I really can't speak on behalf. Since we have two Big Four alums right here, I'd really like to hear their, the issues and problems with the Big Four, especially now, in today's day and age.
Yeah. So I know you're a few years removed, but you got something.
Yeah, I mean, I think you're just a number. Like consider it like a factory.
You're a cog in the machine.
You're just another person. Like you're always going to be replaceable.
Right.
And
yeah. I mean,
as
we're global companies, like how many people? I want to say like 80,000 employees or something ridiculous.
It's insane. And like we said, they'll just throw you a task. You have to do it. So if you leave, they'll throw it to someone else. So that was that. Yeah.
Right.
Yeah, I can definitely speak to it a little bit. Just with the Big Four, yeah. So you're just a number, and you see it with how they onboard people every year. So I started in Stanford, EY Stanford, and they hired like 30 first-year audit staff all at once. Year two, you're up for promotion, whatever, staff two. There's like 15 of you left because everybody just left because they're getting handed ridiculous tasks they have no idea how to do. Maybe not sufficient staffing, so whoever they have in their building, they're just going to schedule your time, and you're salaried, so like you're not going to get paid for this overtime that you're doing.
Yep.
And that compounded over years, more responsibilities, less pay. People keep leaving, so you get even more tasks. That like maybe they're counting on having like 15 seniors in their office, and then all of a sudden 10 of them up and leave. Like, all right, if you're one of those 5 remaining seniors, your schedule's going to be booked the entire year.
Yeah.
You're going to have like a year-long busy season.
And here's another thing when it comes to like culture of the Big Four, you're at the clients most of the time. So you're kind of putting the client's culture in a weird way. I was on a year-round client, but like most people are on a client for only a short period of time, depending on how big the client is. Sometimes, you get a big client, you're there for 6 months, then you go on to another client. But if you're on a team and you like working with that team, enjoy it while you can. Because after 3 years, you're going to have people on the team leave and new people join. But
constant turnover.
Make sure, you're the person people want to work with, and the people around you will, they'll gravitate towards that energy too. But the team you're on really affects your experience.
So, Chris, coming out of Southern, coming out of college, going into Deloitte, would you have done something differently? Would you have gone into a different industry? Would you have gone to a different firm? What would you have done differently coming out of school?
Well, I didn't get to choose my industry. They kind of just told me what my client was. I think you choose your industry once you become like a senior going to manager.
Sorry, let me rephrase that question. That was my bad. Coming out of Southern, coming out of college.
Yeah.
Where would you have gone somewhere differently besides Deloitte? Would you have ignited your career somewhere else?
So what I've done up to this point in my life needed to happen for where I am today. So I wouldn't have done anything different. But looking back, if I saw my experience at Deloitte, I went to Deloitte because of the resume. It was such a big thing on my resume. Little did I know I wouldn't really need a resume. after I left Deloitte because I was on a successful startup and now I'm an entrepreneur. So like it's not as a necessary move. But if you're looking to get into like Facebook or Google, go for a big four. That was my goal, was to get to one of those big
Great
corporate
point.
offices.
Great point.
So if that was my goal, which it was back then, I wouldn't have changed a thing. But if you just want to go to a good company, you don't need Deloitte on there. You can go to a regional firm, but get the CPA. I would say I would if looking back, I probably would have went to a smaller firm because I would have had more experience. My first 6 months, I was just rolling forward, papers.
The work paperwork for the
Yeah,
performers, all that. Yeah.
So that was like, but if you go to a smaller firm, you're doing everything beginning to end on multiple for almost the whole company. So I would have gotten more experience doing that, which is, Andrew, you're experiencing that now. That if I wanted that experience, I would have done that differently. I wouldn't have gone to a big four, but I knew the big four was the right move for my resume, so that's I wouldn't have changed it for that. Yeah,
Those are excellent points. What about you, Andrew?
Yeah, I was gonna say I could share my experience. So I'm kind of back and forth on this because, like, sure, overworking a little bit over a few years and everything, and I do value the experience that I had at EY.
Yeah.
And I genuinely enjoyed my team. I think that's why I was able to make it relatively easy through 3 years. Like, not all that much stress. I had a great team. But the work I'm doing now, it's like I see so much more. That, like, once you get to the big four, like, especially if you're on a big client. I was on a massive client. Like, I was scheduled to them like 9 months out of the year. Like, far cry from, like Chris was saying, a lot of people will be on an audit for 2 months and then another one for 2 months, another one for 2 months. Like, I was on one for 9 months. It's a long time. So I didn't get a lot of exposure. And then even on that one job that I was on, I was only seeing like the same areas of the audit. They kind of pigeonhole you into like one area, be like, all right, Andrew, you're going to take care of fixed assets, run with it. And then, you're auditing fixed assets for like 2 years. Right? Like,
or inventory. Yeah.
fully depreciated, still in service, like one of those.
So, but when you go to a smaller firm, you're taking care of the whole audit, from beginning to end. You're going to see all areas of it. And if you're at a smaller firm, there's the opportunity to get into some tax work.
Right.
And, the accounting side, helping, companies put together financial statements, clients who don't have like a whole accounting function.
Yeah.
Like, the job that I was on, like they had multiple accounting departments, they had like a base in North Carolina. They had the one in Stanford we worked with, continuously.
Yeah.
So I definitely value the experience of a smaller firm.
Right.
And it would be a toss-up. I think if I had to do it again, I think I'd go with a smaller firm to get more experience.
Yeah, it's all your mindset too. Do you want to be a bigger fish in a small pond at a smaller firm, or do you want to be a small fish in a big pond at a Deloitte or
why can't you be a big fish at a big pond?
Yeah,
that's the goal. And that's why we started Ledgerly.
Let me throw out this question, Andrew.
What's up?
When you were graduating, how many jobs did you apply to, and was it between EY and something else, or was it always just?
Oh no! What's hilarious is I only had one offer. It was only EY.
Yeah, that's the thing. So me too. So like,
I applied probably like 5 places.
In my experience, like once you're in the interview for like a big four, they're not going to say no because from my experience, 15 people applied, 12 people got the job, I believe, from my college. So like once you're in, it's not really like. I had interned at an insurance company doing internal audit, but which is more like operational audits, not like financial. But I only had Deloitte. I applied, and immediately they were like, "All right." So I was just like, I didn't even have to worry about a job after school. I just had this dream job that everyone's like, "You got Deloitte? Like that's incredible." So like,
yeah, when you're in college, they make you seem like you made it.
You're
set for life.
I know.
Right.
I was planning what kind of car I was going to get in 8 years when I become partner. then like 3 months in, and I was like, yeah, nah. But no, that's interesting because like we both kind of just had one job offer. I wasn't interviewing at several places. I literally just, Deloitte. One of the partners at Deloitte came to Southern, and then we spoke with her. She goes, "Oh, I'll get you an interview." Get the interview, get the job offer, and I have like 4 months till I graduate. I kind of just was floating the last semester of school. Like,
it's a great feeling.
This is safe. like I'm good.
You got that in your senior year?
Yeah.
Yeah, because I got my
Well, senior, plus 6 months. I did extra time for credit stuff.
Gotcha.
But yeah.
Yeah, because especially with the Big Four, like they try to. I mentioned it before. They're hiring first years every year, like big classes, because they know they're going to lose a lot of them.
Yeah.
So they try to get you in the pipeline. Like I remember, I had yeah. So this is a little different. Maybe I would have gotten more job offers if I was applying senior year.
Yeah.
But like I was applying as like a sophomore to like the it was like leadership programs. It wasn't even the internship. It's
That's
like
right. I forgot about
there was
that.
like levels to it. It's like
Yep.
Oh, that's interesting. Yeah. Did you intern though?
yeah.
Oh,
So
I didn't even intern. I
yeah.
just started
Right.
first year.
Right. That's
Which
right.
was a bad experience. If you have an option, I'm interrupting you. I'm sorry. If you have the experience to intern to get a feel for what you're going to do, intern.
Do it.
Because
Yes.
I was the only person that started as a first year that didn't intern.
Came in cold turkey.
Yeah, and that was
Yeah.
the biggest
And you're
shock.
behind the eight
Like I
ball.
said, the corporate structure, like when you're an intern, you only really roll forward work papers, but
Right.
like you're there seeing how everyone's working, seeing how
you're seeing the work papers. You're seeing
But like I didn't have that, so that's why it was a big wake up call, and it took a lot of adjusting. But I interrupted you. I'm sorry.
Yeah, no, it's all right. So, yeah, so I was applying when I was a sophomore, and if I remember correctly, like I had just missed the deadline, or I talked to the career center like right around when like application deadlines were due. So that's why, like, I think I applied to like maybe Deloitte, KPMG, like late.
Mhm.
So they kind of just like kicked me to the wayside. But again, these were for like their leadership programs. So it's like a day or two event where you go, maybe do some activities like
Yeah.
something about like, oh, analyze these financial statements or like something like that.
Yeah, and some fun games too.
Yeah, and they bring you to some event, they do it up, whatever. Dinner, like I remember, I think EY's was like a boat cruise, which was weird,
That's awesome.
but the dinner was good.
Hey.
But
That's a good write off.
but so I only ended up getting 2 leadership programs, so I went to both of those, and pretty much how it works is you apply to the leadership program, you go shake some hands, as long as you're not an idiot, you get an offer for an internship
Yep.
after that.
As long as you're not an idiot, that's true.
No, and like I don't know what I did wrong, but like I didn't get an offer from one of them.
Yeah.
For the internship for Bloom Shapiro.
Yeah.
So then EY was the only one standing who offered me an internship. I was like, well, I guess I really don't have a choice. But again, this is like, so I got the internship. I think the offer, I got it before I was even a junior. And like pretty much if you get in that pipeline, if you get the internship, again, it's like kind of like with the leadership program. As long as you're not an idiot during your internship, like you're going to get a job offer.
Yeah,
So
most
I was
likely
like pretty much
85% of the people get it. I only knew one person that didn't from when I was a first year of the interns. Only one person really didn't get it.
You really need to mess up something bad as an intern
And
to not get the offer. Like bad.
I know that experience, so I won't say.
I was going to say, I don't know if I should share this experience, but we actually had an intern who got her job offer revoked.
Yeah, let's keep it G-rated for the folks out there listening in.
Yeah, and if you're an intern, keep it G-rated too.
Yeah, exactly. It's good words of wisdom.
But yeah, so I was pretty much set up as like, I feel like I had my whole, like I just nailed it. Like I, checked all the boxes. Like as a junior, I'm like, all right, I pretty much got a job, and I only got 2 years of school left.
Yeah.
And then that's when my shift focused to like, all right, let's get the license.
Yep.
And that's when I realized like, oh, I need 30 more credits I got to come up with in 2 years.
Yeah. And just because you have the job, don't take it easy in school. You still need your A's. Keep that GPA up because they will ask for that transcript, even though you have the job offer. Keep it up.
This is true.
Because people forget they get the job and then they kind of enjoy college the last year. Don't do that. Don't do that. I would suggest not. Still work hard.
Good words of wisdom.
Yeah. Anyway, sorry.
Well, no. So, like, I mean, just to kind of piggyback off of you, Andrew, too. Like, I did an internship with a smaller regional firm. Like Andrew, got the job going into senior year. So senior year was nice. Still, like Chris's point, still work hard, but enjoy yourself, right?
Yeah.
You're senior in college. Enjoy your last year. But for me, I don't like to you guys. I don't know if I would have done anything differently per se from the aspect of going into public accounting and getting the CPA, because I use my CPA to this day. I'm signing off on tax returns. I'm doing tax strategies for people. But that's what I'm using. I'm using the tax side. I'm not using the audit side anymore. So if I were to do something differently, I would have jumped into the tax side for individuals, businesses, but also on the estate and trust side. In my experience, it's a dying breed. So the younger people like ourselves and college grads coming up through the pipeline, the estate and trust area is wide open for us to just suck up as much knowledge as we can. So I think that's what I would have done differently, is instead of the audit side, to get into the tax side. And that's part of the reason why all of us at Ledgerly were like, man, this is all relative. Let's help people on the tax side. Let's do bookkeeping for their businesses.
You're not thinking about that when you're in a Big Four audit.
Exactly.
Like I have all these skills and I'm not using them.
Right.
Like I could benefit so many other people, and that's why I love that we have Ledgerly now.
Yep.
Yeah, and we also have that. We all have the entrepreneurial mindset. So we're not talking to just managers of the accounting like we are when we're auditors. We're just talking to managers.
Yep.
Of workers. We're actually working with owners now and
Yeah.
helping influence them and their operations and efficiency.
Yeah, like the work that we're doing, like they're leveraging for like big business decisions.
Yeah, and it makes an actual difference. Like a lot of times an audit firm will say, "Oh, you're adding value to a company." It's like I might not be, maybe Deloitte is, but now we are adding value to our clients.
Yes, that's
Correct.
huge.
And that's like
It's very fulfilling.
it is very fulfilling.
Yep. So, boys, before we close here, let's get into the last topic. Chris, kick us off. Tax, bookkeeping, accounting. What is your best tip for business owners out there, for people in our shoes that are doing bookkeeping work? What's your best tip out there for?
Embrace change and always continue to learn how you could do it better. I've always believed perfection is a state of mind, not a destination. There's always something new, and there's always something you can utilize to make things better. If you could go to a doctor and get news, you could go to 10 different doctors and get 10 different diagnoses or different treatments and how to work with something. Same with accountants. Always look for someone that thinks outside the box, and constantly think outside the box, and just realize that you're trying to make things better constantly. You're not just trying to get something done and move on.
So do you have your favorite bookkeeping little tip or like a hot topic out there that's helped you with your work that you do on a day-to-day basis?
One of the things that I've always used QuickBooks. I use a bunch of different ones. Wave is good, Peachtree, but QuickBooks is great. One of the things I love about QuickBooks is they're always updating. And one of the things I love working at QuickBooks with clients is, automation. Automation is becoming way more important. Now, you still need someone to bounce off of and work off of, but you can really optimize QuickBooks with automation. And that's one of the topics I love. There's always things, that it does take some manual labor to set up, and it does take some reviewing constantly, but automation is one of the biggest.
Excellent. Yep, and that's what we do at Ledgerly here, is we really leverage the latest and greatest automation and technology out there to help streamline books and give our clients the most value-added time, because their time is money, and we want to be conscious of that.
Yeah.
So, awesome. That's awesome. Andrew, what do you got?
So this is just for business owners in general? Or?
Yeah, business owners, or your favorite tax tip, business tip, maybe something that you recently learned that something clicked, and you're like, damn, I wish I knew that earlier.
Yeah, I just think I see it like a lot with our clients, and this is so simple, but just if you have your own business, just separate your personal from the actual business money.
Yes, please.
Like that's such a simple tip, but it goes such a long way. Because depending on if you have an accountant like in-house or you're talking one once a year, like you want them giving, to Mike's point, that value-added service. You don't want them trying to go back and reconcile bank accounts to like your experience for 3 years.
Yeah.
You don't like that took you 3 months to do?
Yeah.
Like, yeah, you don't want them doing that. You want to have that set for them so they could be looking at your books and giving you strategies on how to save on taxes or where you can take credits and all these things and how you can reinvest in your business. You want their mind, you want that knowledge so they could share with you to help grow your business.
Yeah.
Yep.
And one thing that is a big clutter is, if personal and your business gets mixed together, because then they're, kind of trying to pick out and separate those before they could, actually say like, okay, now I have the correct books. Now let me try and layer on. Because if they're doing it for you at the end of the year in tax season, you come to them in frickin' April, March, whatever, and they got to do all that. They're not going to take a step back and like dive into your books for the year.
And all it'll cost more.
It'll cost more, and
they will bill you.
And that opportunity for the tax saving strategies to implement throughout the year, it's already gone.
It's gone. Yeah, you can't go back to
You
December.
know how many tax returns they're trying to do right before 315, 415?
Right.
Like they're not going to give you those tips and services.
Take
at
advantage
that time.
and ask your accountants in like October to kind of look over everything. It's worth the investment to do that.
Yeah, don't mix your business with pleasure. Take advantage of a QuickBooks.
And that's something that like anybody can do. Like you don't need to know like exactly where everything goes and how to book things. Like as long as they're separated personal and business, like that's at least a good first step.
Yeah.
Right. No, excellent points.
Awesome.
I want to get behind something out there that's been discussed on social media and whatnot. But it's the difference between a Schedule C taxpayer and an S corporation, and basically the self-employment tax behind it. And the long story short behind this is that everyone's saying that, hey, doing an S corporation is gonna save you thousands and thousands of dollars. However, as a business owner, there's more time that goes into the S corporation from the tax side. It's another tax return. It's more time out of your pocket because you need to be organizing documents a certain way. It's a separate tax return. There's another thing that you should be setting up called an accountable plan, and you might need to get an attorney involved, your CPA involved, because something that's on the Schedule C that isn't on an 1120S S Corp tax return is the auto expenses and the home office expenses. So if you're not tracking them on your Schedule C, you need to track them in this thing called an accountable plan. So when you add up the time, the additional money that you're paying for the separate tax return, and the amount of money that you're paying for this accountable plan to be set up, your tax savings might not be as much as you thought. But it's not just the amount that you're saving in money, but it's also your time commitment. So I can't believe I'm about to use this analogy, but I'm going to bring up the vaccine. I can't believe I'm doing this because this is not like me. The people that got the Johnson & Johnson vaccine, they said, okay, one shot, right? One shot and I'm done. That's like your Schedule C on your 1040. It's one tax return. People that got the Pfizer and Moderna, they maybe wanted a little bit more assurance, even though it took more time and it was more of an inconvenience. So they had to get the first shot, which was their S Corp return. And then they had to file their 1040 tax return. That's their second shot. So it all comes down to the S Corporation is most likely going to save you some tax dollars, but it's going to cause you to spend more time and effort with your CPA, with your attorney to get everything in order. So I guess that's just my little tidbit, my 2 cents to this topic. I'm going to do a YouTube short, a Facebook short, an Instagram video, and put it pen to paper on breaking out the numbers for a single member LLC and the S Corp, but I just wanted to shed some light onto that.
Yeah.
Thanks for sharing with the class.
Yeah, man.
Love it. Professor Mike here.
Yeah, and if you guys haven't done so yet, go on Instagram, Facebook, or YouTube. Go Ledgerly. You'll see all of our shorts. We have a bunch of tidbits like that to help you learn more.
Yeah, we're always trying to share some facts with you guys. And if there's anything you specifically want to see or a topic you need some help on, let us know. Send us a message. We'd love to divulge on the topic and share what we think.
Yep.
Yeah, go on our website. We have a link. You can schedule a free call with us, and we can see if we can help you anymore.
Right.
Go
Click
Ledgerly.
the links, get in touch, comment, like, subscribe, do whatever you need to do. If you're a business owner, like Chris said, schedule that free consult call. Let's just talk to you. We want to get to know you. We can look at your books, see if there's anything that you're missing, see if your current CPA isn't giving you the value-added time that you want, and we're here for you.
Yeah.
So, guys, we appreciate it. We appreciate you watching. We can't wait to work with you guys, grow your books, and help you in any other ways that we can going forward. Take care.
Stay handsome.